I've been trading for over 3 years and have tried hundreds of different entry models. And it took me years to find and create a trading strategy that truly resonated with my style of trading. One of the most overlooked requirements in day trading is trying to find a strategy that matches and suits your trading personality. So if you're someone that likes a 45-minute workday, fast-paced trades, something that shows up every single day that's guaranteed and is high probability with a maintaining over an 85 to 90% win rate trading strategy, then I encourage you to stick around for this entire video because I'm going to give you one of my highest probability entry models. Then I'll break down the system that I trade with on a day-to-day basis, and then I'll also review a couple of trades that we caught on the live stream yesterday. To first truly understand my system completely, we need to break down the 3 most important concepts of the system, which is going to be entry, time, and risk. So it's very important that you actually know how to enter your trades at the most high probability setups, then what time to obviously find these high probability setups, and then knowing what risk to obviously take to maximize our high probability and that maintain that high win rate. Now, when I first started obviously using fair value gaps and trading with fair value gaps, I noticed a very, very common pattern. So I've traded pretty much every strategy you could probably think of in the market, or at least most of them. This one makes the most sense to me, and I only like trading stuff that makes sense because that's what resonates with me. I'm not going to trade something that I don't believe in or don't actually back. So with this one specifically, I traded IFVGs quite often, but a lot of the time they were very subjective and when you could take them, and I wanted something more continuation based. I didn't want to sit there in the market and always try and find a reversal. Now, don't get me wrong, I still use IFVGs here and there, but I love my continuation model. It's super effective and it's very, very simple. You're not sitting there in the market trying to predict every reversal. Now, I tried to obviously use fair value gaps like I was using with inverse, but I was using fair value gaps to obviously just deliver price. But rather than entering blind on a fair value gap and not knowing the next result, sort of just sitting there and just kind of praying for that fair value gap to obviously work and hold up and not inverse was a little bit worrying, and it didn't really, happen all the time. It was subjective what fair value gap you'd had to choose for the delivery. So I needed something that was going to give me a higher probability and a better edge on fair value gaps that was obviously going to indicate when price was going to deliver in my favor. Rather than entering blindly on a fair value gap, what if we could use something from price action to indicate us that that fair value gap is going to now deliver in our favor? And that is the special trick behind the model. So instead of just obviously taking this bullish gap as is, as you can see, we are currently respecting it down here with obviously the bodies are not closing below the fair value gap. That is obviously price respecting it. Now, with a bullish fair value gap, we want price to go higher. But again, this could obviously just continue down and not actually move up in our favor at all. So what if we could find a way to obviously have price go in our favor? Well, I have. Anytime we obviously come into the gap, for the first time, second time, third time, fourth time, fifth time, it doesn't matter how many candles, from the very first one that comes into the gap, each time we're going to mark up our every most previous candle to our current. So as you can see, this is our most current candle right here. So this bearish candle to our left is our most previous. So even though this one came into the gap first, we're still not going to mark that out. All we're going to do is just mark out the bearish candle's high just like that. We are also going to then wait until this candle was to close above. It doesn't have to close a specific distance. Nice and close would be ideal. And as long as it doesn't make equal highs with the wick, with this swing point or sweep it, then it is a high probability setup. Now, this special pattern right here is a simple indication from price that volume is now working in our favor. Example, notice here on the left, every time we break previous candle high, we continue to momentum through. That's exactly what we want when we're scalping the market. We want to use every previous candle high and low as like a level of support and resistance. So obviously support being on the lows and resistance being on the top. So when we close above a previous candle high, typically the next few candles will then go in our favor. And it's a simple move from price action, right, to obviously understand when volume's coming in, when we obviously have a strong level of buyers, when we close above previous candle highs. And we're also delivering out of something that is supposed to be rejection based and have a lot of volatility with a lot of orders resting in that area. So it kind of works hand in hand. And this is one of my most favorite and most ideal entry setups. So how do we actually enter the setup now that we know the pattern? Well, all we have to do is make sure that it follows a few simple rules. The bodies cannot close underneath this level. The gap has to remain obviously intact and still respected. the previous candle high must have a candle closure above it like that. It's always going to be your most previous to your current candle, which right here I've indicated where our entry would be. And there is two very crucial rules with this setup. Number one is we cannot make equal highs with the swing point before closure, and we cannot sweep the high with the swing point before closure. With those two simple rules, that is everything you need to take your entry right there. Now, you're not entering as price is pushing through. You're not entering on the next candle too late. You're entering exactly on the closure because that's where I have the most data collected. Now we're going to break down the time portion of my system. So we're only going to be placing and executing trades between 9:30 a.m. and 10:15 a.m. Eastern Standard Time. All right, the entry timeframes are going to be the 30-second time frame. That's going to give you the most frequency for that day-to-day setup. All right, that is my bread and butter time frame. If you're a complete beginner, do not stress. The 30-second time frame is completely fine. You are not going to stress, especially if you know my model or you're inside of my premium group. Right, everything is taught completely beginner free, so you can obviously understand it. It is not scary. Other people just say it's scary because they can't trade it. The 1 minute time frame is going to be less frequent, but it's still going to be okay. I obviously prefer the 30-second. That's the bread and butter. Now, we're specifically looking for a trade each 15-minute candle realistically. So each 15-minute candle is going to have its own set of price action and different, obviously, set of probabilities. So any 15-minute candle between 9:30 and 10:15 a.m. Eastern Standard Time works completely fine. The first 15-minute candle is obviously that opening range, usually quite volatile. 9:45 and 10, that 15-minute candle range is going to obviously prepare for that new 4-hour candle at 10 a.m. So it's got some good volatility behind it. And then you will usually see bigger expansions between 10 and 10:15 a.m. for decent continuations. Now, NQ futures, that was a horrible tick, by the way. NQ futures is what I'm going to be trading. So this is what I trade live every single day in front of my premium group. This is what I'm just going to be referencing today. You can choose realistically anything. Forex, options, stocks works as well because obviously we're trading continuation based, which continuations happen on every pair. As long as it's not a consistent pair that just consolidates, this would work completely fine. If you guys are liking the strategy, want to learn more, and you want to trade it live with me every single day, then I encourage you to go to the first link, top description. You don't have to, but inside the premium group, obviously you get a lot more information. I don't share everything on YouTube because I want to keep it fair to that private side, but I have all the necessary course information you need, live stream recaps, webinars, PDFs that will help you pretty much complete trading from A to Z. So if that's something you're interested, you know where to go, first link, top description. Otherwise, let's get back into the YouTube video. So now let's get into the breakdown of a couple of these trade examples that I was able to catch on the live stream with my premium group yesterday. So this is Thursday, 10th of July. So again, I've kind of got this like little sessions indicator kind of map out that 9:30 to 10:15. So I'm just going to be breaking down the trades that I caught. So like I mentioned, we're going to be trading 15-minute candle portions. Now, again, we didn't really find anything on the 30-second time frame during this first 15-minute candle. That's completely fine because obviously if you were to, you know, scale up to something simplified like on here to like a 2-minute, I'm pretty sure we had a 2-minute continuation trade here. You can see obviously we had a fair value gap, and then we obviously closed below that previous candle low right there. So that was a 2-minute setup. We didn't sweep that low, so I didn't actually take that. I usually just stick around to the 30. 2 minutes okay if you want to trade that as well. But again, once we come into this macro, you can see we didn't quite have a trade opportunity here. We kind of inverted that gap to the upside, so we're not going to get faked out by FVGs. Now we had these gaps again. When we have multiple gaps like this, you know, a lot of traders kind of get confused. What gap is obviously going to work? Where should we go from? That's why this model works so well, is because as soon as you get that indication from price, as we close below that previous candle low like we did here, that is pretty much price telling you that we don't need to go higher. That's our delivery. That's our gap we're going to work off. So that's why I love this model, because it's not subjective to what fair value gap. And considering there's 30 million, I know there's going to be some comments being 30-second has too many fair value gaps. That's why this model works perfectly, because it's not it's basically subjective when you see the candle closure, because it's like, hey, there you go. That's pretty much what you're taking. You know what I mean? Not, oh, I'm going to wait for this after you see the indication. You know what I mean? That's not something you're going to do. So you're going to enter your trade as soon as that price closes, as long as it doesn't sweep or make equal lows with that swing point, which we're completely fine based on that candle closure. Now, the risk, all right, the risk. We've got the delivery, we've got the candle closure below that previous candle low, of which I marked out right there from the previous candle low right there. All you're going to do is you're going to put your stop loss at 20 points fixed, just like that, right? And you're going to put your take profit at 20 points for a 1-to-1 risk reward. Now, I know people think one-to-one risk rewards are not profitable, but they are, all right? Especially with prop firms, when prop firms has consistency rules where you can't really make too much, right? One-to-ones are super consistent. They're super high probability. They perform and show up every single day. And plus you're going to surpass a one-to-one before you even get to one-to-twos, one-to-three, one-to-fours. Not to say that you can't hold these trades if you actually, have the right draws on liquidity and direction on the market. Like I said, you'd be able to probably hold this for, close to a 1-to-5 risk to reward. You can pretty much get a 1-to-2 most times as well. I like to just stick with that 1-to-1. It's nice and consistent. And, if I'm taking 3 1-to-1 wins a week, that's 1% risk on my account. That's 3% a week. And people really struggle to get that on any other strategy. So that's why I really like this, because the win rate's super high. The probabilities are there. The frequency's there. You're going to find a trade every single day. And this is a trade I caught yesterday. So I called this one out live to my group so they can also take that. And, we had a ton of people obviously take that. And then following along, I'm not going to take another trade until the next 50-minute candle, but we did actually, deleting that one and going off, we did actually have another fair value gap continuation set up, obviously perform itself right here. We closed below previous candle low after coming into that gap. Pretty much the same candle did it, but we didn't sweep that swing point. We also had another one right there, but when we did close below that previous candle low right here, we did take out that swing point. So that's a little bit too far, so I'm not going to worry about that. Now, of course, once 10 a.m. hits, that's where the bread and butter comes in. You can see that we're respecting that gap right there. You can see I'm going to mark out that previous candle low once price comes into that gap. And then you can see we closed below that previous candle low without taking the low. So that was a perfect entry. Again, I'm going to enter that setup right there, which I called live, right? 20 points, and then obviously 20 points right there. And it hit, of course. So that was very, very consistent. I love this model. This model is absolutely insane. If you were to backtest this simple strategy across, the last 2 weeks, last 3 weeks, last 4 weeks, last couple months, it absolutely rinses. And once you have all the components of the strategy, mapped out, obviously I can't give everything for free. I got to keep it fair to my premium side, right? Obviously you got draws on liquidity target, what timing, the understanding of these macros and timing, and obviously how to find a lot more high probability setups and patterns, which I showcase more on my premium side. Then you're going to be able to catch trades literally every single day with over a 90% win rate and just milk prop firms. So that's why I really like this strategy. We have a blast trading it on the live streams. So if you enjoyed this video and you want more content just like this, like the video, subscribe for more content, comment your thoughts about the strategy, maybe test it out and see how you go. Until the next video, I will see you all then.